watching Business Today TV. I'm Sakshi Batra, and on this video we're going to be discussing all about the food delivery platform Zomato. The stock of Zomato has today hit a 22-month high on strong Q2 numbers. Remember, the shares have been in focus this entire year. In fact, from the month of April, we've actually seen Zomato shares jump almost 140%, and now brokerage houses are further raising the targets on Zomato after the successive quarterly profit that the company has posted. Remember, after nearly a decade in India of the food delivery space that Zomato has been in, it's finally a profitable business, and Zomato's second consecutive quarter of profits definitely show that the company is now finally figuring it out. The stock is back above the market capitalization of 1 lakh crore rupees, and this is for the first time that the stock has crossed this level since January of 2022. Now, the company reported its second consecutive quarter of consolidated net profit this time. The food delivery platform clocked in a profit after tax of 36 crore rupees during Q2, that's July to September quarter of FY24. It's up from just 2 crores that was reported in the previous quarter. So a substantial jump on a Q-on-Q basis as well. And when you actually compare it from the last year, it had reported a net loss of 251 odd crore rupees, same quarter last year. So substantial improvement on a year-on-year basis, turning black, successive 2 quarters of profits coming in, and a jump on a sequential basis from 2 crores to 36 crore rupees. Even the revenue for the company in the same period has grown by 72% on a year-on-year basis to 2,848 crore rupees from 1,661 crore rupees earlier. Now, the company's gross order value, or GOV, across the B2C businesses has grown by 13% sequentially to 11,422 odd crore rupees, a key figure that the company really uses as its metric to find out how the demand is really shaping up for the company. So, the gross order value of 11,422 crore rupees, up by 13% sequentially. The food delivery GOV, or gross order value, has also grown by 9% from the June quarter and 20% from the last year as well. And nearly all this growth in the gross order value has been led by a company's growth in the volumes that the company has noticed this time. Now, basis this kind of earnings that the company has reported, brokerage houses are giving a big thumbs up to Zomato shares. Nuvama Institutional Equities, for example, has now raised the target price for the stock by over 20%, 27% in fact, and has now brought it up to 140 rupees. Also, Nuvama believes that Zomato's revenue growth has been much stronger than they were expecting. All the businesses continue to grow at full throttle, so everything points to a positive reaction on the stock markets and for the stock even going forward from here. The other brokerage house we are going to be talking about is HSBC, which has also raised the price target for the stock to 140 rupees, maintaining a buy rating. It is positive on Zomato's guidance for the next quarter, and the firm also remains bullish on Zomato's long-term prospects and also sees it as a continued traction for the quick commerce business of Zomato as well. The third brokerage house is Jefferies, which has now said that Zomato's GOV, the gross order value growth acceleration, addresses a key investor's concern around the monthly transaction units and the frequency as well. The brokerage house has given a buy rating on Zomato on the stock and the bullish target price of 165 rupees on Zomato now. Also, with the dominant market share, the strong growth in food delivery business, hypercure business, Zomato may report, the brokerage house says, a strong 53% adjusted revenue on a compounded annual growth rate, or CAGR, over the next FY23 to FY25 basis. And this is something that Motilal Oswal has believed and has put out in its recent report. MOFSL, or Motilal Oswal Financial Services, also has a buy recommendation on the stock with a price target of 135 rupees on the stock as well. Morgan Stanley, on the other hand, has also said that Zomato's solid performance in the September quarter demonstrates that its strategy is working well, and it is an example of its executive prowess as well. However, the brokerage also sees some upside risk to Zomato's FY24 revenue, after the strong Q2 showing. The firm definitely has an overweight call on the stock with a price target of 125 rupees, but Zomato itself has maintained that for the December quarter, although it maintains that there could be a sustainable growth, but not so much of a difference could be there, because the kind of anticipation that they were having on the back of World Cup being hosted in India and on the back of festivities might not translate, as this is also a period where Navratri and Shraddh period was dominant, where a lot of people keep fast. So their order inflow was only perhaps limited and lost some ground due to the festivities around Navratri and the Shraddh period as well. So that is a key monitorable, but definitely most of the brokerage houses are giving a big thumbs up to Zomato's Q2 earnings. Price ranging of targets anywhere between 125 to all the way up to 165 rupees as well. So that's as far as Zomato is concerned. We'll continue to watch how the stock performs, and also we will continue to get you all the information around the food delivery space, Zomato, the new age tech stocks, and everything stock market. So do stay tuned onto Business Today Television.